Hello, everybody. Kirk Spano, investment trends for August 2025 with Scott Shooter Henderson and Teresa may be all over the world. No, she's at home in Idaho, I believe. Correct?
Yes, I made it back home,
All
toured
right.
around Europe, and I'm back.
And where should I take a train to when I'm there for 3 weeks next spring?
Ah, you're going to come to Idaho for 3 weeks? Oh, no, you're going to Europe, of course.
Wrong train ride.
Yeah, wrong train, right? There's no trains in Idaho. That's how I knew.
Oh, well, there's a train that goes through Idaho.
Well, like freight, but no people.
Oh, really? No.
Yeah, seriously. We lost the train like 10 years ago and they can't get it back.
Really? That is the
Yep.
train that my great grandpa was a conductor on from Iowa to Seattle, Washington.
So cool. I wish
Yeah.
we could get it back.
I know for a fact that he went through Boise all the time.
Ah, we have a great train depot, just no trains.
Huh. All right.
But we do
Well,
have good potatoes and we have great wheat. Thanks, Vince.
you know what they've done with a lot of the train depots here in Wisconsin? If they is they've turned them into really cool restaurants and wedding halls.
Uh, that's ours. We only have one. And like we just have one freeway, and our one train depot is a venue for events.
Yeah. Okay. All right. Well, let's get started here. Wrote some articles this week. Wrote the update for the punch card stocks dividends, setting them up by tier so you could treat it kind of like, all right, this group is my first priority, that group's my second priority. Working on it. I have about half of the first tier done, working on the rest. But one of the stocks that I wanted to buy was in this new cannabis path to profits. So this article is free for everybody. It's at every service, so you don't have to come to this service if you have one of the others. But I talk about how President Trump has promised, and this is the same promise that has been made by other politicians, so it may not come to fruition, but to schedule marijuana and cannabis as a Schedule 3 drug instead of a Schedule 1. What's the difference? Schedule 1 drug is we're going to kill you really fast and not let you make any money on it type of drug, like methamphetamines, heroin, things like that. So right now, marijuana is in the most dangerous category for drugs. And let's face it, most of the states already are over that. The federal government will follow suit eventually. President Trump says he's going to take care of it. Two of the companies that I'm investing in, that I bought investments in this week, will take advantage of that rescheduling to Schedule 3. If they make a couple changes in banking that allow interstate commerce, the upside profitability for these companies is really 40-50% day one because of the way taxation works with these companies at the current scheduling. So just bumping these down to Schedule 3 and then making some more changes that are pretty, I can't imagine they wouldn't make them, would put marijuana on par with alcohol. Suddenly it becomes a very profitable business. It opens up to capital. Private equity probably gets in there, and these companies do very well. The two companies that I'm buying pay big dividends, and they are kind of hedged bets. So they're not pure plays on cannabis. They're kind of secondary plays. They're the picks and shovels and land. But for me, that's good enough. If the category gets real hot, there are ETFs that we can invest in that we have used in the past. Not doing it yet. I want to see the proof in the pudding. I want to know for sure that they're doing the rescheduling. So, we might want to try that down the road, but let's wait until the trend is a real trend. All right. So I wanted to talk about what happens after the Federal Reserve cuts interest rates. Now, this is pretty straightforward. If we are in a recessionary cycle, the stock market will be down for about the next year. Very basic. So if we are in a recessionary cycle where we see a recession, the stock market will go down. That has happened every time. If we are in a non-recessionary cycle, then typically the stock market just continues in a very average way. The range outcomes is pretty substantial. So in a recessionary cycle, there's almost always an immediate decline after the rates are cut. The market bottoms somewhere between 3 and 18 months out, from -10 to -36%. So basically, very straightforward terms here. If we get a recession, bad, right? in a non-recessionary cycle, everything is pretty much run of the mill, pretty average. If there's mixed signals, we typically get a negative return, but not necessarily a bear market. And we have seen this a couple of times in the last decade where the stock market corrects, typically in the teens. We've had a couple of 19% corrections during non-recessionary cycles. So just be aware of what can happen, and that if it does look like the economy is going to slow down to a recessionary speed, basically zero growth, then we probably get a pretty substantial correction. And let's, I don't want to go through all the charts again, but let's remember the stock market is very overvalued. We're at the most overvalued in history, depending on which measures you're looking at. Buffett indicator, 10-year price to earnings ratio, Shiller. It depends on what you're looking at. But the market is anywhere from the most overvalued in history to third most overvalued. Ooh. So we have to be aware that even though valuations seem not to matter for long periods of time, when they matter is when something happens, and then those valuations contract. So the wider they are, the more they can contract. And that's what you need to know. So I don't think we get more than a 30% correction even in a recession, because I think the Federal Reserve and the federal government come out spray painting money. However, we're at a delicate point in history with our debt because it's huge and it's growing. And the people who financed our debt may or may not be terribly happy with us. So if they don't finance our debt, then we could get a much more significant credit crisis than the Fed is really equipped to handle. That would require congressional action. And given that Congress is pretty tied up right now, I'm not sure how fast that would occur. I think in an evenly split government, similar to what was going on during COVID, where there's a couple votes in either direction, changed everything, I think everybody gets everything they want, right? There's a lot of horse trading. I'll give you this, you give me that. There is no drawing a line in the sand about that. So if we get a correction, especially if it's recessionary, I would expect a massive response. I think based on what's coming on the credit side, whether it's a 1-2 punch now and later when the boomers are more retired, I don't know. I suspect it's a 1-2 punch. It's kind of a double dip recessionary period, even if they're not super severe recessions, or maybe the second one is more severe over, say, the next 5, 6, 7 years. I have said that I think that there will be at least $15 trillion of money printing by early next decade. And, people are telling me that I'm nuts, but, I also said, 10, 15 years ago that we were going to have a Fed balance sheet. And this is when it was $1 trillion. I said that we'd have a Fed balance sheet of 6, 7, 8, maybe $10 trillion at some point. Well, we got up to 9. And people say, well, but that was COVID. We know that we overbailed on COVID. I mean, anybody who doesn't realize that by now just, is choosing not to do the reading. So the hole blown in the economy by COVID, we overbailed by double or triple. And it depends on what numbers are real. I expect that the next time we have a credit crisis or a threat of a credit crisis or a recession or some combination of those things, they're just going to bust out the hose. Now, what happens when they bust out the money hose? Teresa, what happens when they bust out the money hose? What goes
when
up?
When they bust out, well, the stocks.
Yeah, assets. Now, we get inflation. It's not just what we're paying for, Idaho potatoes, but it's everything. So assets go up in price. And that's what you really need to understand, is that owning assets is the way to beat inflation. Now, into a recession, when you get that first correction, you want to be pretty, defensive. However, at some point during the correction, basically when they start talking about bailouts, you just take it for granted that they'll get to it. And you should probably assume that they'll be bigger than what we need and buy your favorite assets. I think that there is probably a dip in real estate coming over the winter, if not lasting a little bit longer than that. We'll see. We're seeing record homes for sale in a lot of markets without buyers. Milwaukee is not like that. Milwaukee is a pretty balanced market. But if you take a look at Florida and Arizona and Las Vegas, parts of California, parts of the East Coast, there are a lot of places, ex New York City, where, there's too many houses on the market, and people who put these houses on the market are asking for last year's prices because they were through the roof, or earlier this year prices because they were through the roof, and they're being stubborn about lowering the prices. Until the mismatch between income and housing costs narrows, you're just not going to see a flood of buyers come in. I think the buyers are out there, but they take a look and they do very simple math. They say, well, I can rent for this much, I can buy for that much, and my taxes are this much. So it's just a 1, 2, 3 equation, whether or not you should buy or whether or not you should rent. And the millennials and the Gen Zers are so put off by what's been going on in real estate that they're just choosing to be renters. And I don't know that a little teeny tiny correction in real estate is going to change it. I think you need to see home prices come down at least 10%, but probably in that 20 to 30% range in a lot of markets. So we'll see if that happens. Zillow and Berkshire Hathaway's real estate arm both came out with charts and statistics in the last couple of weeks that they expect the boomers to trickle into the market at an increasing pace over the next decade, and that it just started. I would expect, as somebody with some experience in real estate, that multi-story homes will be the first ones to sell. And then gradually, as people get older and they decide, oh, I shouldn't be living on my own, then those will get sold too. There will be some dynamics with family members buying homes. But I'll tell you what, I have plenty of clients and I know plenty of people and I talk to plenty of people. There's all sorts of people who don't have kids that want to buy their houses. So I would expect that the supply of homes available is going to trickle up, and that at least until we get more immigration, you're not going to see a big surge in demand. So you'll get increasing supply without a big uptick in demand. If interest rates come down, the builders will build as well. So as I've said, at some point we have to let a lot more people in the country. The robots and the AI are not going to, provide service. They can do some of the white collar stuff, but anything that's a service job, you need people. So I don't know where the lines cross, but it's something that we should always keep an eye on. And the markets are not great at looking forward 2, 3, 4, 5 years. The markets tend to look forward 1 year maximum and back 1 to 5 years. So it's a backwards looking style of investing that's out there. That's always been the case. And they just look forward 1 year. And when something bad happens, when there's an event, all the contractions happen pretty quick. We saw it this spring. There was a slight outflow of foreigner money, of international money. And there was a bit of a contraction, just a technical contraction. And the market went straight down and then V-shape right back up. I think that if you take a look at the S&P 500, which we'll do in a minute, and the QQQ, you can see the potential for what's called a megaphone pattern. And I want Teresa and Shooter to take a look at that. But if we get a megaphone pattern, that usually is indicative of a much larger correction than what people would expect. That it's a very negative sign. So with that, let's take a look at the major markets. All right, I want to look at TLT. All right, Shooter.
We are in that channel we talked about 2 months ago. We've got that range between about 95 now, except we need for it to get up to 95, we need to break 90. Right now, resistance is holding. We're bouncing back off of that again. The most likely outcome is lower.
Yeah. So if TLT goes lower, this is the 20-year treasury. That means that long interest rates are going higher. And the thing that would cause long interest rates to go higher is not enough people buying the bonds.
Yeah.
So let's suppose the international markets dry up 5, 6, 7, 8% of their buying, which happened last week. Is a retrace all the way down into the 50s? I mean, that's a price that we haven't seen since the early 2000s.
No, the demand zone bar down there that you see around the 23, that's the low. So a little bit below where the tape is now, where price is now, is our low.
This is the short-term low. So TLT, when it came out in the early 2000s, when the 20-year treasury was much higher, TLT was much lower. I actually have that chart. So
TLT's low occurred 7/1 of 2004 at 80.35, at least what I have on my chart.
Yeah, right here. So I just want people to understand that even though we're having this right now, and it looks like it could be right, it could be ready to break out up, right? It doesn't mean that there's not one more leg down. So I don't think it's going to get much below 80 unless international investors really jam it to us, right?
Yeah.
If international investors boycott, that drives it down.
I don't know that they can with trade. Trade needs to drive it first. We'll have a large number of indicators before that, because ultimately that's why everybody holds treasuries, is so they can close the transactions on what's being traded.
Well, are you real optimistic about international trade?
I don't think consumption's slowing down, because we'd have seen it already if it has, or if it was.
Consumption has been slowing down. It's just that the top 10% of the population just keeps on spending. The other 90% of the population is not spending at an increasing rate anymore. And they haven't been. Mark Sandy was talking about this the other day. So was the guy from, I forget his name, but another pretty good economist was talking about how if you're not in the top 10% of the population, your income's been getting squeezed and you haven't been increasing your spending. It hasn't been positive for a while. So we'll see how it turns out. But I think it's iffy that international investment in U.S. assets is going to maintain the pace that it has the last 3, 4, 5 years. Or even the last 15 years. So you want to go all the way back to post-Great Recession. Everybody's been putting money here because of the quantitative easing. My anticipation would be that if we get a recession, if we get a correction, they'd probably come back because of the quantitative easing. But until then, until there's an event, I'm not so sure that I have a lot of confidence. So you have two different outcomes here for SPY. What is SPY?
One
Looks
is
like
an impulsive move, and one is a blow off top, basically. And right now we're tracking on the impulse move, so that means our 3 will come in around 716.
So this could follow through a lot.
Yeah. Oh no. Yeah. This implies to me that we just absolutely burst on the Fed. I would suspect, some of the historic numbers in 2019, the equities or indices, S&P 500 moved 28% off of the Fed's intervention over the next 16 months. So I guess it really depends, or it's going to land on how aggressive is the Fed and how the markets respond to it. And the way the dip buyers have been consistent, because realize the short side has basically been non-existent. It's like extremely difficult to track. It's not following through at all. And we have this slow stepping grind that's like a very small percentage. There's a number of days that we've seen less than 0.5% range on the indices, depending on which one you look at. But there typically is one leader, and then the other 3 are sort of like laggers. So they're rotating in and out, but we're still grinding higher. So it implies to me that there's a lot of interest to get off the sidelines. And, I think one of the best analogies for that is that even myself, I didn't like this low because it didn't complete. I think a lot of other analysts for the big boys felt the same way. And there's a lot of people caught in this rally that aren't fully vested. A lot of big money, because they were concerned about that breakdown or that becoming an ABC or the top was in, etc. Now we have confirmation that it's not. The question is, do we get a deeper retrace back to 580 first, or do we just take a moonshot from here? That's something we won't know. But I can pretty much say, if you take our higher low that we have in here, which I think it's 622 and change, if that doesn't break, the most likely outcome is that impulse burst.
Yeah.
So
yeah, I can definitely see that, because markets can remain irrational longer than a short can remain solvent.
Yeah.
And
it can also extend a whole lot further than you think it can.
Yeah. And that's the old saying, right? The market can remain irrational longer than a short can remain solvent. The problem I see is timing. If we get a blow off top, I think that it just presages a much bigger decline. But we'll see. Earnings don't support it. So that's really, at some point, earnings matter. I don't know when that is. but at some point earnings matter. And having been in all kinds of Discord rooms and trading rooms over the years, and a couple of ones lately, I will tell you, nobody even thinks about defense until their moving averages roll over.
That's because it's expensive. It's like, it's really expensive to hedge. And the hedges in the option market have totally disappeared over the last 2 weeks. I mean, except for today. We did have 12 million come in on Microsoft short and about 7 million that came in on Walmart short. But that was it.
Yeah. Well, the thing that I think people should be aware of is that the mutual funds, which are a shrinking part of the market, are fully invested. So there's no money in mutual funds that can flow into the market. That all flowed in over the last 3, 4, 5 months. But that's a smaller part of the market than it was 10 years ago, 20 years ago. So I don't know exactly how much impact that has anymore. It's still big, right? All the 401k plans, things like that. But that is mostly indexed to the S&P 500, either directly or indirectly through a hodgepodge of funds. So the S&P 500, it's some unbelievable number. It's like 50% of the money that goes into S&P 500 funds or large cap funds finds its way into the 11 biggest stocks, 10 biggest stocks, something like that. So 490 stocks are getting about a quarter of all money invested, 10 stocks, because about half of the money that's invested is indexed or close to index, and about half that money goes in the 10 biggest stocks. And that floats the index value. When you take a look across about 450 stocks in the S&P 500, they've just chopped. I mean, you pull up chart after chart after chart, they've just chopped. And then you got 30 or 40 that have beaten the index, and then 10 that have crushed the index. And they happen to be the biggest ones. So because it's a market cap weighted index, that pulls the index up. I think, and I pointed this out a couple of weeks ago, if you take a look at the charts of the mega caps and you take a look at the quality of their earnings across the board, with the exception of Microsoft, and you can argue NVIDIA, but I think that they have challenges coming. With the exception of Microsoft, all of these companies have significant challenges developing. And if they drop 20, 30%, that's going to scare the bejesus out of people because the index comes down fast and hard. At what point does pessimism and fear set in? I don't know. Got to watch it in real time. If there's a recession and people are losing their jobs, it's going to be like 2008. If there's no recession and people aren't losing their jobs and they spray paint money, it probably comes back pretty fast and pretty big, right? Because then you just get the inflationary impact. So as far as trading an index goes, if you have a 401k plan and you have the ability to trade it every week, right? Because there's limitations on how many trades in a lot of these plans, you can do a trend trade here if you want to, but keep the brakes covered. That'd be what I would tell you. The 401k plan that I've built has 28 ETFs in it, and I can buy gold, which I've done. So, it's not something I do a lot of, but in a 401k plan, it's people's retirement money. It's not something that you want to take a lot of risk with. You build a balanced portfolio, use the momentum funds, XMMO, SPMO. I'd focus on those. I wouldn't buy SPY. I'd buy XMMO and SPMO, the momentum funds for the SP 500 and then the S&P mid cap. So if we get this blow off top, just understand that's mostly all going into the biggest companies, the biggest 10 companies, give or take. And if they come down, it all comes down. So when you pick out stocks, you have to actually know the company and you have to understand how correlated an individual stock is to its index. Even the mid caps, how correlated are they to the S&P 500? And as you go further down the capitalization scale, the smaller the company gets, the less the index that it's in matters. So IWM stocks, we know that 70% of those companies are unprofitable and never will be profitable. But we also know that some of the biggest stocks in the stock market today were small cap stocks 5 or 10 or 25 or 30 years ago. So understand the difference between the index, which is basically whatever the top 10 stocks, 10 biggest stocks do directed. We have very narrow market breadth. We had that little pickup for a little while, but right now it's very narrow again. So if we get a blow off, maybe that means that everything else starts to participate.
Yeah, maybe on the downside. I've not seen that since October of 22. We have not had great participation at any.
Correct. Yeah, correct.
Yeah.
So if the market blasts up, it's one of two things. Either everybody's participating, which we haven't seen in a long time, or the large caps are just getting, the mega caps are just getting more mega.
Yeah.
Right. So Teresa, tell me about this. So do you see this breaking out above that trend, or do you think it is range bound?
Oh, I think it could. I certainly would not rule that out. I guess I drew a red line, like I thought it wouldn't go above that, but I think that it certainly could overshoot and go above. My point was more that we know we're coming up on a seasonal time, but where we have weakness in the market, but I just don't see it getting much weaker than, that 600, 610, something like that. I think that those buyers that came in at that price level are going to go ahead and hold it up unless something horrible is going on. And then we head back up. But then at that point, that's where everything is just wildly I guess we could stay up at that point for a while, but it just looks to me like everything is just wildly oversold at that point. And then when you go back and every time you retest a buy zone, it's weaker. So you go back and what held you up before won't hold you up again if you're in some sort of a downdraft. But there's a lovely buy zone there, 530, 500 to that certainly could hold things up. That's how I see it.
Okay. Do either one of you think much about a potential credit crisis?
Yeah, it's brewing still in Japan. I don't know what the outcome is because at this point they seem to be mitigating it, and they're pumping one hell of a lot of money into it at certain times to keep it afloat. Then it seems to wane, and then it starts right back up again. And I don't see that going away. The problem for us is that will unwind at some point the yen carry trade, which should be significant. I would think a minimum 8% drawdown in the indices to maybe as much as 28%. And I'm watching it, but I'm not seeing the red flags. We're seeing what we are seeing is the bondholders, the Japanese bondholders, such as the insurance funds and the retirement funds that are attached to that. There's a number of those that are getting ready to go belly up. That could spook the markets when they actually fail because they're so far upside down right now. It's a Lehman Brothers kind of thing. They won't recover.
Yeah.
I think you also I think you just can't rule out the willpower of the current administration to make sure that it gets papered over in whatever way.
Yeah. And at this point, crypto will be that. That's the direction we're going. That thesis where we can expunge all the debt that I've had for, I don't know, probably about a year and a half now. It looks more and more that they're entertaining that on a global scale. There's a lot of conversations going on that at the World Bank and the IMF now about using crypto as a mechanism to reorganize the debt load for different countries, which basically is the same storyline.
So who gets screwed on that?
Yeah, all of us do because it just devalues what we currently have. The only way you're going to benefit is to own hard assets. When that tune changes, what's your sign? That's your sign. You need to start moving a higher percentage into hard assets, and I would say metals and gold and real estate and et cetera, and not necessarily in one jurisdiction either. You want to look at where the highest growth is. You want to buy the higher end stuff that's going to withstand. Just like you look at the Great Recession. What held up well in the Great Recession? Residential properties over $1.5 million. Everything below $1.5 million got clobbered. The reason being is because nobody over $1.5 million sold. They helped. So there's always a piece of the market that survives. But metals, we literally, I haven't raised my gold number again because I think the end of the year will still stick right around 3,700, which is what I thought was the number going into the second quarter. But there also is a part of me that thinks we could push to 5K easy by 2030. And it may push much higher than that to 8K if we have something that dramatically spooks the market into hard assets. So that will be a different thing. But I not jumping off base. One thing that is caught my attention specifically with Ethereum, not going too far off base here, but we clearly have a shift into stable coins where they're creating parallel interests on the Ethereum blockchain, and a bunch of money is moving there. Like it might be at $2 trillion already since Trump signed his executive order at this point. So I can't really grasp how big it would be moving forward if that's what we're seeing already, because there's just a lot of activity. I mean, we had some of these attached Ethereum coins that moved 20 or 30% this month. I mean, not just in growth in dollars, but in value. But
what did your AI sandbox warn us about though with blockchain and quantum?
Yeah, well, sooner or later, quantum computing is not a new form of computer intelligence. It's a cracking mechanism. And who was that biochemist guy that went to jail for fraud? I'm forgetting his name.
Who cares? Who cares? He stole money.
But the point was, he's a cryptologist. Underlying was his original profession. Right. And I had watched a video on him a couple weeks ago where he talked about that quantum computing is going to become a hacking mechanism where we have no security in any devices that we have, or any programming that we have. It's all cracked, including Bitcoin. I think that ultimately becomes our problem moving forward at some point. But then they're just going to have to take the encryption and they're going to have to scale it up. But that doesn't exist yet. We haven't written it. So when somebody, which is one reason I think China's spending so much time on quantum, is because if they can crack it, they are so far ahead of us because they basically can look at everything we have and there's nothing we can do to stop them. And that's kind of a scary thing, because literally people will be able to crack things, whether it be your bank account or credit card or crypto wallet, won't matter. Everything's a 256-bit encryption. And once they're capable of cracking that, there's no security. So that could be but I think the timeline that I've discussed with Sentinel is he doesn't think that'll happen for 3 to 5 years. That's the same case he thinks about treasuries, or he, she, it, whatever he is. And we've had a lot of lengthy conversations about treasuries. And
you don't know your AI's pronouns?
And no, I've specifically instructed him not to have any.
All right, I'm sorry. I mean,
I have no interest in going there.
All right. I just make jokes because everybody knows which way I think.
Right. By the way, what's your pronoun?
What?
Zed, what's your pronoun?
I call mine perplexity. I just use perplexity. I mean, I pay for the good one, but I think that what's going on in blockchain, and I had this talk with people around a campfire 4 years ago, people who are pretty well versed. And I think that the thesis that you and I were talking about 4 years ago is the same as today. It's that most of the cryptos go to zero. You have Bitcoin, which is digital gold. It will never adopt as money, in my opinion, but I could be wrong. And then you have Ethereum and Ripple and Solana and whatever. You have a number of blockchains that integrate with software as a service. Salesforce and Accenture, and you go right down the list, Bank of America, JP Morgan. I mean, they're all going to use blockchain to an extent for simplifying accounting and transactions. But I think that the inherent introduction of more hackability, I don't know if that's the right word, I'll make it up if it's not already made up, is going to make it such that 98% of the cryptos get destroyed. And now for the survivors, X Bitcoin. Okay, so let's talk about the Ethereum and the software as a service blockchains. Those are going to get increasingly institutionalized, as we're seeing with stable coins, so that they're, in fact, it's not going to be DeFi. It's not going to be decentralized finance. It's going to be just part of the system. And with Bank of America using it, and the International Monetary Fund using it, and the World Bank using it, and everybody's using it, right? So they're going to have these blockchains that share certain abilities to communicate through the underlying blockchain, but then they're going to have something on top and I'm not making this up. I'm just
Players, yes.
regurgitating. They're going to have something on top that makes it unique to their company and their need. So I don't see Ethereum really having any more value than the money it can make on its transactions times a multiplier, right? Towards a times a valuation. So if Ethereum can generate, well, think about it. I mean, how much money do all the companies in the SP 500 make? Ethereum can't make more than that. And in fact, probably can't make more than a few percent of that. Okay, so then multiply it by a gold ratio. You make it on par with gold. Okay, well then all of a sudden, when you start talking about a $2 trillion market cap on Ethereum, that might already account for all the money it'll ever make in the next 20 years. And by the way, it's half as big as Microsoft. So, I don't really see Ethereum and Solana and all these others as having a lot of true value. Now, that doesn't mean traders can't spike it. I think they can, but it also doesn't mean that it can't crash. When I bought it for 400 and change, and sold it in January because I said I can't figure out a way that they're ever going to justify the valuation. I still can't figure it out, and I've almost given up. I have run queries and I've done research, and I'm just like, I can't figure out where they're going to make $1 trillion a year, right? Because all of a sudden that becomes more expensive than the software as a service that they're purporting to replace. Yeah. So they have to make less money than all the software companies combined, period. Can't be more. And the idea that the stable coins somehow introduce a lot of money into the system, into the treasury system, no, I think it's going to be cannibalization. Without new money printing, money just shifts. And since there's already mega amounts in money market funds and the treasury market, right, biggest market in the world, it just moves around. So without quantitative easing, which I do think is coming, there's not really new money for stablecoin. It's just taking money from one pocket, put it into another pocket. So, you can say, well, but what about the emerging markets? Man, the emerging markets are a couple percent of the global economy. They're not a big deal. So what about China? Well, China is going to do their own thing. What about India? India might do their own thing. So when you start taking a look at Europe, well, I don't think Europe's going to help us. So when you start taking a look at where this money is going to come from, that's going to be all brand new money going into treasuries from stable coins, I'm skeptical. Because I do really think that it's just one pocket.
Another fad.
What was that?
Another fad kind of thing.
Well, I don't know. It's a fad. I think that we're going to use stable coins. And thinking as a good Sicilian, I think that people's desire to, I don't know what the term would be, but morality wash their desire to launder money but blame the Fed because, oh, you're devaluing my money, so I'm going to do this other thing. Look, American standard of living is so good because, and granted, it's flowed more to the top than the middle in the last 45 years, but American standard of living on aggregate is so good because of the dollar.
Yeah.
Not despite the dollar.
Great privilege.
Yeah, it's not despite the dollar, it's because of the dollar. And any defraying of the value of the dollar ultimately is inflationary. And, and I say that not being totally against an import tax, because I do think that there's some abuses, but, 50% tariffs and, the things that they're doing, at a minimum, they're disruptive for a while. At worst, they can bring on a depression and potentially war, because with depression, as we saw in World War II, a big war followed. So I'm very cautiously optimistic about the long term because I always am. But I also see that once again, we're experimenting with big numbers and people's lives. And, you take a look at the number of assaults on ICE officers. I mean, I predicted that right when it started, right? I was on this podcast or a similar podcast saying, look, at some point, people are going to get very angry at ICE, and they're not just going to stand there and be shocked. Well, now they're saying that assaults are up 700% on ICE officers. I doubt that's true, but, I'm sure they're up. And honestly, I don't know that you can blame them, because as we have seen, if you look at Instagram or you look at X, look, the arrests are not being targeted at the worst people. They are being put out there in a very visible way in a form of intimidation that is, and again, I'm not saying that there shouldn't be consequences for illegal immigration, but what I'm saying is that when you
This doesn't feel like the right way.
when you prosecute this way, there's going to be pushback, is all. Yeah. So I mean, and you can't say, "Hey, I'm grabbing this mother who's taking her kid to school and leaving the kid standing there at school, like what the hell just happened," and think there's not going to be a comeuppance. So there's a lot of things that play into the financial equation. Immigration, one of them, and if we disrupt the order that we've had since World War II, just understand that it's a disruption and it may not turn out the way you want it to turn out. So,
I'll go back to just go way back in time. Rufus Henderson, my great grandfather, when he came to the United States, he was an indentured servant. He worked for 6 years for his citizenship because he wasn't able to afford his trip from Europe here.
Yeah, and that was probably by all ethical standards, if not legal standards, but by all ethical standards, that was probably pretty immoral.
Well, correct. But, the outcome is that he started the first shoe store in Andover, Massachusetts, which really started our family. Yeah. So, he did it the right way. And
no, he didn't. He had it jammed up his ass and he survived.
Well, no, it was either that or he was going to die in Europe. Well, that's how bad it was.
Yeah, well, you get my point.
Yeah.
All right, so okay, let's move on to QQQ. And how does this play into the SPY? So this is where most of the money is.
Yes. And, for a time being, we were rolling over and that faded away. Now I think we're starting to lead again, even though the charts look very similar. The trajectory, the slope, or the symmetry of that impulse leg that we have here. I think I'm going to extend that 3 up to 620, 626. I think that 1618 fib ultimately is where we head in that direction. It's all going to depend on CapEx and how much that actually turns into revenues for them. If we have major monetization come in from like Meta and Google and Microsoft, we have a straight shot there. Those are the 3 that we need to play that game. That's sort of my thinking. Structurally, an ABC is not excluded, which is the next line over. Then we could also be in a tighter ABC, or we could be in a leading diagonal, either of those outcomes. Those are all still in play. None of those have been invalidated because until we break above 582.11, none of that's really changed. The second ABC structure, that still could be in play because the context is there. That's one of the challenging things when you have a straight line.
Yeah.
You don't have really defined corrective waves. Like if you had a clean wave 2, like we had in our prior impulse wave, just going back to around January 2024, January 2023, way down there. That correct? Yeah, that's a good point. Wave 2. See the breadth that we have in there on those corrections. They're much steeper. It's retracing to the 50% fib 61.8. We're not seeing that in this impulse leg. We're not getting that corrective. So that's extremely euphoric and impulsive in my view. And we're going to need something to change in the markets or the perception that people have, consumers, one, retail, secondary. Then we have the commercials and how much money is actually on the sidelines that'll need to change. But this is a very impulsive look that we have right now, especially with what's going on with AI.
Yeah. So all these down here are still potentially could happen.
Correct.
Okay.
And ultimately, if you flip back to it for a second, you have some confluence. This is something I like to look at. Right around the 150 fib, we have 3 of them that basically hit right at that line. So, 650 is a nice even number. It would be a good spot for us to reject right there. I always look for similarity in time, whether it be between a weekly, a monthly, coming in a daily, when you have consistent views in the structure of the account. And we have that in the NASDAQ right now. So that's just that my 2 cents. I wanted to address that, whenever time you have price points that rhyme in time on your Elliott wave degrees and your time frame analysis that you're looking at, that seems to apply that we're probably going to hit 650, and that's a good spot for us to see some kind of rejection. Now the question then, is it going to be shallow, go back to the 382, or are we going to see a 50% fib retracement or 618, which by the way, it's usually a 618, as I call it, elongated or extended. An extended is typically the 78.6. Elongated is typically the 100 fib to 123 6 fib as far as a retrace percentage.
Okay. Teresa?
Well, Shooter and I see similar things. He drew more lines than I did, but I kind of see the same thing as the S&P, and not a shock. But things can always overshoot, of course, because the markets are rather euphoric right now. But I still think when we see weakness, it's going to pull back into those weekly buyers and likely turn from there. I mean, unless we're in the middle of something, then it just continues downward. But those weekly buyers should be strong enough to turn it back up. But then eventually we do reach a point where it has to take a break. And if we return to those weekly buyers, it is likely that it can break below it. I mean, it can also hold, of course, but it's likely that it can shoot through that and go down further. But again, there's got to be an event of some sort.
And if I may, it's just about supply and demand zones. And just I've done a little work there, but probably not as much as you have. Is there a line in the sand that you see in those zones where we just break down and then we just have that flush from there? What do you see as that level be?
So I do sometimes break them down and do a volume profile on the zone. But typically, I just look for the zone to hold. First retest, it's always likely. If you're in a trend, first retest, it is so likely. The probabilities definitely favor that will turn price back up. But the more often it tests it, but then once it trades down through it, the first, just one tick below the bottom, and it's invalidated then. And you're looking for more buy. In this case, you'd be looking for new buyers.
Yeah. The thing that wipes everything out is a credit crisis. If the United States can't finance its debt, everything falls off a cliff.
Yeah. Oh, yeah. No, it's going to be straight down.
Yeah. All right. I'm going to take 1 second to look at IWM. There you go. There was your second. You never want to buy IWM. IWM is just a dumb index. So we're going to get over here to Bitcoin. And before we get off on Bitcoin, I just want to point out that we actually have an AI guy on the line here. And he says in the chat that the problem with the users of stablecoins, which is mostly going to be emerging markets because they want the lowest transfer fees, is that Ethereum is competing with cheaper blockchains like Tron and Solana and 10 other chains, he says. So it ends up being a race to the bottom for lowest fees, right? Lowest gas. And in that environment, it just becomes another tool of software as a service companies. And I don't know that I see it taking over in any particular way. It'll just be a tool in their toolbox that they use the way they want to use the tool. And, I have a hard time believing that there's anything more than a little bit of cannibalization that goes on. I don't think it's money creation. And I think that there's a lot of people speculating in imaginary assets. I took a look at NFT art the other day, just because it popped up on my Twitter feed. And so I went down the rabbit hole and I wasted 2 hours of my life. And I was just like, I cannot freaking believe that people are paying to say that they have a digital image that some guy created out of, it looks like Atari art. And so you remember Mr. Rogers, the Land of Imagination? It's a wonderful thing, but I'm not so sure there's a lot of value in what's going on because I can't see how it improves anybody's life. I don't see how it adds value. And therefore...
It dilutes it, actually.
What was that?
It dilutes it.
Yeah. So I just, again, this is one of the things that could perpetuate a downward spiral in asset prices if these young people lose a bunch of money, right, and their earnings are constrained for whatever reason, right, then that's the problem. A lot of people aren't going to be handle it. We already know that most of the population is tight. Well, what happens if a couple percent of the people who aren't tight become tight, right? So Bitcoin, I have made the case that it's digital gold. And I will tell you, the reason I believe that, really at the heart of the reason I believe that, is because I think that it is a criminal way to launder money. And we know that that's what it's been used for. The maximalists, the ones who think it's going to become money, I think that they're ridiculously naive. Governments will never allow it to happen. But as a tradable commodity, they're probably okay with that because they're taking a skim. Now, if governments lose money on Bitcoin, they're going to make Bitcoin go away. And it just goes back to the Silk Road or, whatever illicit way that people have of moving it is. So, we saw a couple of weeks ago that a gigantic block of Bitcoin, which hadn't been active since 2011, suddenly moved around. And I haven't followed up on it. I don't know if any of that money got turned into cash, but it was one of the early people in Bitcoin, like money that hadn't moved since 2011. That's only 2 years after it was invented. So suddenly, 15 years later, either somebody decided to move it around for estate planning reasons or whatever, or what? It got hacked. So I don't see Bitcoin as money. I think if Michael Saylor and the other people who are trying to manipulate it don't destroy it, and it becomes a BlackRock toy, then it can become digital gold, and the wealthy will use it to launder money, and everybody else will try to play in the pond. But governments are not going to give up their autonomy. They're just not. And so, to the extent that they're benefiting from it, then fine, it goes up. And I think it can get to $1 million just based on comparisons to the gold market cap. However, that doesn't mean that it's guaranteed. And if you're listening to people that say it's going to replace dollars and euros and yen and renminbi and I think the rupee is going to become something, then I think you're listening to the wrong people. Because the idea that governments will just say, hey, we're gonna let you all use dollars. No, they're not. They can shut it off. They really can shut it off. They haven't, but they could. At least for 90, for everybody who's not savvy enough to get around it, which would be 90% of the people, they could destroy demand real easy. So I think it's important to understand what Bitcoin is, who it threatens, who's making money on it. And if the governments aren't making money on it and the rich aren't making money on it, I mean, this is one of those assets that can drop 99%. Will it? I don't think so, but it could. And you should understand that. There's not really intrinsic value underlying it other than to the extent that the people who own it have their own net worth behind it. Well, somebody wakes up one morning and says, I'm getting squirrely, right? And then a whole bunch more people get squirrely and they sell. And then it's a spiral to the bottom. So I just want people to understand that the odds of this replacing money are almost nothing, right? Almost nothing. And it's not similar to gold because gold actually is physical, right? The biggest owner of gold in America is what company? It's Eve's favorite fruit. It's Apple.
Oh, Apple.
Apple's the biggest owner of gold in the company because there's a little bit in every iPhone. So, gold actually has some industrial value and it's pretty. Pretty goes a long way. Take a look at a lot of old dudes with their young wives. And, gold is pretty. And a lot of people use it. Now, because it's been hoarded by central banks and people who have vaults full of gold bars, there's clearly the potential for gold to crash too. Especially if one day we wake up in the next decade and Rocket Lab or SpaceX or Blue Origin or whoever says, oh, by the way, that mining equipment that we sent out into space, it actually worked. And we're delivering a load of, gold and lead and rare earth metals. Then what happens to the price of all that stuff? If suddenly we can mine it without environmental ramifications, because nobody's going to pick it on an asteroid. So, what happens if suddenly that's affordable? So we'll see. And the other thing with Bitcoin is, and somebody just put that in the chat, is Michael Saylor and a couple other companies now are borrowing a ton of money in the debt markets and the preferred equity market, which is just a massive scam. I'm with Jim Chanos on this one. You could see MicroStrategy, and Michael Saylor, who I'm sure is skimming money on the side somehow. You could see them spike Bitcoin and then crash it. Because if suddenly they can't pay their debt, then what? Then that company starts liquidating Bitcoin.
Yeah, but they're running a 14% yield strategy right now. I mean, that's actually working. Some of the stuff they're doing is smart.
Yeah, well, until it breaks.
Well, that's right. But they're running it like a market maker is how they're running it. I mean, actually, there's...
which means that they will eventually be regulated.
Yeah, which at that point it might stop. But,
yeah.
Me, if I was sailors, I'd just move it offshore. If I'm doing what I'm doing now, that would be, I would look at it.
And that's my point about governments. You can't provoke the government. If you provoke the government, they're going to say, hey, Mike, you're going to jail for this, this, and this. Might not be what you think it should. You might not be what you really think he's guilty of, but it's what they can pin on him.
Right.
Al Capone, he went to jail for taxes. He killed people. So I actually think that Michael Saylor is bad for Bitcoin adoption because he's soaking up so much of the supply. I think it would be better for Bitcoin as a universal asset.
But he's also elevating price, though.
For now.
That benefits us that are on the right side.
Yeah. So if there's a credit crisis, right, everything comes back to that.
Yeah.
And the reason I'm talking about it, you have not heard me talk about this until last year or so. If there's a credit crisis, last time I talked about this was 2007. If there's a credit crisis, everything goes down. And some of the things that are stretched, and especially the things that are leveraged, like Bitcoin now, get destroyed. I saw the dot-com crash when stocks came down 90, 95, 99%, 100%. For people to think that can't happen again is historically naive at a level that I need to use. I'm trying not to even use the Z word anymore, but it just is off the charts how naive that is. So, when I say that I think we see the 2022 lows again, people say I'm nuts, but then I show a chart that looks an awful lot like a really big, long head and shoulders. They go, but it won't happen. Okay, maybe it won't, but not understanding the risk is, bad. You need to understand the risk.
All you can do is manage position size.
Manage position size and direction.
Yeah.
Momentum. So the thing that Shooter does and Teresa do that I think is incredibly valuable, and this is why I use XMMO and SPMO, is because the assets that have momentum behind them, especially if you can do it in a systematic way, invest in them in a systematic way, are almost always the ones that win. Almost always. It's very rare that momentum assets don't win. Why? Because price is going up. Therefore, there's momentum. Momentum begets momentum. It's very rare that something just shoots up and then stops, right? If it goes up for a while. And if you are being defensive, you just got to keep your break. You have just to get out of the rationalization of looking backwards and say, okay, this looks like it's bending over, right? The rate of positive momentum is diminishing. The curve, instead of bending up, is starting to turn over. That's a warning sign usually. And choppiness for a while, unless it's a consolidation based on value, usually means it's going to fall off a cliff. So
this chart that you have up is a perfect example of that. Look at wave one.
So tell me about it.
So the top there, wave one, notice how it's toppy, flat, and rolling over.
Yep.
Then we got that nice correction.
Yep.
Right? Notice how we don't look that way. Right now we're flagging. We got a beautiful flagpole. Boom. Now this is an A of an ABC of the next flagpole. So we should get another flag around 76 that should complete around the 2618. That's when we need to worry about what occurred on wave one happening at that point. So then we want to start repositioning. So after the wave three correction, where we pull back into the low 70s, right? Maybe we want to be selling some covered calls around 76 on IBIT to hedge yourself. maybe sell $80 or $85 covered calls to mitigate your risk to the downside. And then as we're pushing into wave 5, we get 50% of the way up into that leg. I'd be taking partials or shifting a piece like 3 to 5% of my gains into the short side to hedge risk on dated puts is the structural way I would look at this as a longer term trade.
So do you see Bitcoin starting to break out again?
Yeah, we're going to get another from the first flag from wave 1 back to your left over the black wave 1. Go to your right just a little bit, right there. That is a flag and a beautiful pull. That typically implies that the next leg will be a measured move. The same distance from the base of wave 1 to the peak of wave 1, which happens to also be wave 3. Now that's an equal wave 3. Most of the time, more than 75% of that time, wave 3 is our longest wave. So we could very well extend upwards of the 200, maybe even to the 223 fib, and then we complete with wave 4. And often wave 4 becomes much shallower. So if this becomes a leading diagonal and wave 2 down there off of that wave 1 is our base, we will get a much shallower wave 4 on that impulsive leg, which could push us well over the 300% fib for wave 5. So structurally, this is a good thing for an impulsive move to the upside. I would like it to be a little more accelerated. I would like us to be leaping a little more than we are. We're taking very small steps and then we're back testing, and that is something that implies that we're getting a consolidation in the overall market. And to be candid with you, I don't really grasp that well because we've not seen it before. This is a product that has true scarcity. We don't have much on the U.S. stock exchange that has true scarcity where we have so many people interested in buying and selling it.
Well, most of the stocks are limited shares. And in fact, the buybacks are reducing, share counts. So there's scarcity in shares. I mean, we've seen the number of shares go down for a long time now.
Yeah, but they turn around and they issue more shares. So that's not the case.
The total shares on the stock market have been declining consistently. I think it's like 25, 26 years now. It's been a long time, because of buybacks but it shifts, right? One company's issuing, one company's buying back.
Right.
But, the number of public companies to buy has diminished by 2,000 or 3,000 in my career. And that's why one of my top picks is a private equity company. Private equity is buying up the world. And now that they're talking about putting private equity into 401ks, what does that scream out? I mean, it should scream out, they want the retail people to be their exit liquidity. So, their cash out. So I don't know. I mean, I have a question about the Bitcoin though. So if this is indeed a 1 and this is a 2, could this be a 3 right here?
Sure, it could be.
And then that would be the 4. And then where would the 5 go? It should be shallower than this, right?
In a leading diagonal, yes.
So if something bad happens, it could peak out right about here.
Yep.
And then pull back 1, 2, 3, pretty deep.
That would be equities roll over and Bitcoin rolls over with it. That's my thesis in that scenario. I don't, with the amount of capital that is, the breadth, how the market cap continues to expand. It's not slowing down. It's accelerating. And as you create more types of crypto, whether it be Link or XRP or Yo-Yo coin, it doesn't matter, or Doge, the reality what it does is it shifts a percentage of the buyers who were successful in one coin, and they're taking 5, 10, 20%, and they're starting this new coin. Next month, they're doing the same thing. And this has been happening for years now. So you have a lot of people who have many different investments in different coins. And we saw this in Ferrari sales as an example. When the markets turned down and we had a breakdown in Bitcoin, and we broke below our lows, all of a sudden the market just froze up. And nobody was buying that. So I think that similarity would be what we have. So I think the correlation will be that indices roll over for whatever reason, and then Bitcoin rolls over with it.
So I want to just show you some charts. This is XLV since the financial crisis, right? Did very well. How well? Well, did I kill it? All right, there we go. So, right, XLV actually outperformed SPY for a long time. And suddenly, there's a little bit of an alligator jaw. Does this close back up?
Yes, at some point.
Eventually, right?
Yeah.
The problem is that when you take a look at the top 10 companies in this index, XLV, you got to go company by company and say, okay, is the whole group going to move up, or is it just going to be catalyst-driven companies? I think that Pfizer, Eli Lilly, now that it's fallen, Novo Nordisk, I think that there's certain companies that have an edge. And I would rather focus on those because you get to collect that big dividend in many cases. So while I do expect this to close, it might be more SPY coming down, and this one only going up a little, right? It could just be SPY coming down. Doesn't mean that they have to meet in the middle. They could meet in XLV's neighborhood. So I like healthcare, but I like picking the stocks. If you're in a 401k and you can invest in XLV, which I can in mine, I am nibbling it in the 401k. Okay, done with that. Gold, since we talked about gold a little bit, way back in 2018, and I haven't been aggressively buying gold because I always figured I could beat it with companies, which sometimes is true and sometimes it's not. I mean, in hindsight, I should have just put 10% of my money in gold and let it sit. But I said buy gold way back here. And I have reiterated that a couple times. I don't even know what I was drawing there. So do I think gold ultimately gets to 5,000? I said way back in 2020 that it probably would. But I thought that it would stall around 3,000. Well, so far it is. But if it dips down into this fair value zone, right? If it gets under $3,000 an ounce, given that I think there's quantitative easing coming, I think that it becomes a pretty easy buy down in here. So just keep an eye on it. People ask about the miners. What's my answer on mining stocks? 9 out of 10 of them are shit. But I do think that if this pulls back, it's probably buyable. Are you looking at gold at all, Teresa or Shooter, either one of you?
I look at gold all the time.
Oh.
I love it.
You love it.
Why
do you love it? Is it pretty?
Well, well, yes, but I also like silver. But right now, I don't know.
I trade well.
Yeah, I trade it. But I agree with you. If gold gets down to around 290 or so, 280, 290, I think it's a definite buy.
Yeah. I think that right here, this little jitterbug here, I think is pretty likely to hold.
Yep.
I mean, I guess it could come down into this one or even this one, but I don't know. I just don't see central banks selling it. I mean, it would take central banks selling gold to really be a problem, or getting it off an asteroid cheap. So I do like gold on a pullback, and I feel some non-buyers regret that I haven't bought it. I mean, because this was a heck of a rally, and I talked about it, and then I didn't do anything about it. So
Don't you hate that?
What was that?
Don't you hate that?
Yeah, it happens all the time, right? I mean, because you're like, is this a top 20 idea? I don't know. I don't think so. But it would have been.
Yep.
Yeah.
Kirk, you like to talk about the old man panicking, right? When there's a correction, they never panic where gold is concerned. They're going to hold their gold through thick and thin.
Yeah.
I still have my grandfather's old coins.
Yeah, and that's, you've heard me. I talk about buying physical gold all the time. It's just laying around. I don't even show it to anybody. It's just laying around, and I don't know. I mean, I am proud because, and it happens actually way more than I ever thought it would happen. But the rings that I bought Jolene get complimented a lot, so I feel pretty good about that. What I would like to do is start finding some of that heirloom jewelry again, which we haven't gone out and shopped for in a couple of years, which because of this. But back in here, we were doing the rummage sale and the estate sale thing, so we could do something fun. I do think that gold probably jitterbugs, but I just, with all the money I think that's going to get printed in the world over the next 5, 6, 7 years, I don't know. Gold seems like a pretty good store of value if you can't buy real estate. I mean, I think real estate's better, but gold is tradable and it makes people feel warm inside. So there's that. All right. Where's my cannabis? I just wanted to talk about the cannabis. So make sure you read this article. It's free at margin at fundamental trends. If you're not in a service, I know most of the people on the call are in a service, but you can read this one for free. And it talks about why what's going on in cannabis could ignite another bull market. And I got 2 investments that are on the safer side. You know, if they do reschedule to 3, and they change some of the other things that go on, if capital can get into this market and these companies can list on a New York Stock Exchange or on QQQ, on NASDAQ, then a lot of these stocks can do pretty well. In which case, YOLO, right? Do I have one out here? I don't have it. I don't have it open, but it could be that the marijuana ETFs. Where's my bookmarks? I took this off my bar so that I wouldn't show my subs. There we go, my subs. All right, you got YOLO, Advisor Shares Pure Cannabis, and this is the one that you'd want to buy because this is the one with companies that aren't listed properly. You just look at this hype of legalization and this crash. I mean, is it a 90? It's almost a 90%. I think it was a 90% crash at the bottom. So I do think that you can probably buy the dips on this if you just want exposure. And honestly, it's going to go like this, and then it's going to jump up here, and then it's going to, jump up here, and then you're going to ask me if you should buy it up here. So I'm just telling you, if you feel like you took it in the shorts over here, I think you make some of your money back buying the dips quickly. And you don't have to take a big exposure, but if you're okay investing in this, I think this is probably going to do well. And I think private equity is going to come in and buy a bunch of these companies. So I think it's bottomed. I think this little rally kind of stinks, right? I mean, you hate buying a little rally, buying that rally, and it doesn't look so bad there. But, over the last month, right, you go, oh, I could have bought it at 250, and now it's 350 or 329. That's not that big of a move, given that, right? It was, all you traders making these charts so big with all your minutes. Right?
That's why they got that delete button.
They're hour charts. All right. So, I mean, this was way up here, and that's probably hype. But this right here, man, look at that volume, fair value gap. I really think this could get into the teens. I mean, it'll take some time, but the instant profitability that the reschedule brings, and then all the other legal changes that would probably happen in short order, the ability to list, the ability to fully use the financial system, the ability for interstate commerce, that's a big deal. Right now, you got to stay in your state. You produce it in California, you're supposed to use it in California, or the 30 states that have it legally now, and Washington, D.C. So, the funny, ironic thing about this, that he's talking about legalizing it, is, him and his sons are like rampantly anti-drugs and alcohol. Yeah, it's like, well, to me, maybe one of their only virtues. But whatever. I mean, it seems to me like this could break out. I mean, is that a breakout? Are we about to see a breakout in this? You chart people. Is that a breakout? Is that about to be a breakout?
Yeah, it really doesn't confirm until 520, I think it is.
Yeah, I agree with that. The monthly chart is very interesting. It does break out like at that $5 or so, but on the monthly chart, the asymmetry on that's amazing. For on the monthly now, there's no sellers till $15 monthly, right? So there's going to zigzag. It's going to zigzag a bit around $4, $5, $10, but yeah.
So
that's an asymmetric chart.
Yeah. Okay. So it could zip.
Oh yeah.
I think it's going to. I think he's going to legalize it. That's what I think. I could be wrong, but if you go find the interview with the CEO of Scott's Miracle Grow, you come away from that going, "Oh my gosh, he knows what's coming." So I'll find. I think I linked it. It's linked in the article actually. So the article to Scott's Miracle Grow CEO is linked in that article, and you can't listen to this guy and not go, this is what's going to happen. So if you're able to do that, I know some of you can't, the halal investors can't, I don't think, but yeah, I think it's going to go. I do. I think it's for sure going to get up to around 10. And then do they go nuts on it? Maybe. I don't know. They've proven, the traders have proven to me, the young traders have proven to me that they can go nuts for a while. And honestly, I stand by that they're pretty good traders. I stand by that. I think they use the tools pretty well. I don't think they understand what they're doing, but they know how to use the screwdrivers. So, all right. Anything else, Shooter? Anything that's like super important to you?
No, not specifically. I'm just trying to find a way into this AI infrastructure still, and I'm still not finding anything I really like.
Okay.
Maybe bank short, but that's still, we're not seeing it in flow yet. I want to see flow before I jump on board that. But Goldman Sachs and MS are two of the institutions that looks like they're ready to roll over as far as I'm concerned.
Yeah. So you think the indexes can go higher, but you're having a hard time finding anything to buy?
Yeah.
Well, that's
I don't, I get to a point, where when my setups work, that's a different story. So, my whole risk management evolves around my win rate or my loss rate, right? So when my win rate's over 70%, I'm expanding. When it's below 70%, I'm sort of just dabbling based on the percentage of risk that I've defined. When I drift below 60%, I'm actively cutting. Well, right now I'm running about 62% for the last 60 days. And what I've learned that tells me is that we don't have enough flow for the options to become profitable with a larger percentage of the trades you're putting on. So you trim back a little bit on position size. And, ultimately that's what I've done recently. I've cut back position size. I've cut back the number of entries. I've gotten much more strategic in trying to box in covered calls and cash secured puts around common shares because I'm seeking the premium, just a percentage gain, just trying to knock out that 3, 5, 8% every week. And then we just go to next week, find some candidates, put it on, and, like this week, we put 4 names in swing trade notes. 3 of the 4 are working perfectly. 2 of them are yield plays.
Good. Teresa?
Counterpoint to you talking about the NFT and the art, I just have to point out to the dude who bought the banana duct tape to the wall that's a very physical art, which was also a total waste of money. So so I just had to mention that one. But then I think that renewables for the last month have really shown a lot of signs of life. TAN, PBW, end phase this week, I think, is in the process of breaking out. So if, I've put a little money in those areas because they seem to be working.
So I will tell you a secret.
Okay.
I just started buying end phase.
Okay. Yeah, so I did this week. I
sold a put, okay. Bought a little bit. I don't know if I've reported that yet or not, but I know I mentioned it. So I have bought a little end phase. I think I put it in the coverage. Yeah, last week. 811. Yeah, there was an alert that went out yesterday. So I think end phase is interesting. They and I'll put a Kirk's take on this one quick. In Solar Edge, because Generac has not really executed yet. I think they will. Alternative energy is not going away. Clean energy is not going away. This is a pause. This is a rhetorical argument. We can't support the energy needs of the country without it. And we can't support the energy needs of the country without natural gas either. So, there isn't all of the above strategy needed in energy, and we're going to get it at some point, or it's going to be more recognized. So I like Enphase. I mean, for managing power, for managing energy, they're important. And it's very hard to bet against TJ Rogers. Yeah, I think the thing to understand that a credit crisis destroys everything. There's nothing around it. A recession destroys everything. There's nothing around it. And on a credit crisis, because that's probably sudden, government probably jumps to it pretty quick within weeks. A recession, they can argue about. And I'm not so sure that the reaction from government comes all that quickly. So I would understand that the millennial and Gen Z traders know how to use the tools. And I said earlier, if the moving averages start to break down, they're going to bail. And somebody said something about the mega caps would be ripping if QQQ goes up. Kind of. Remember, half of the money goes into the indexes. A quarter of the money goes into the 10 biggest stocks, give or take. And the traders play on that until the moving averages roll over. And then they all bail. The question becomes is, do the indexers ever panic sell? And I'm going to tell you when they panic sell. Do you know when they panic sell? When do people panic sell their 401k assets? Pretty easy answer. When they've lost their job. I know we haven't talked about this in years. Yeah, I've mentioned it here and there. The number one harbinger of a recession is job loss. Keep an eye on unemployment. If unemployment starts to go up, that's a problem. If the labor force starts to shrink and job creation stops, that's a problem. It's all about jobs. Jobs lead the economy, or they trail the economy, but you see it. So while it's not evident that the consumer has tightened up, they have. The consumer has tightened up. Now, the top 10% of the people probably haven't tightened up, but almost everybody else has. So anyway, just understand that that's how it works. That's how it's always worked. That's how it'll work again. If people start losing jobs, that's really bad. That's recessionary. And if we get inflation at the same time that we have a jobs recession, it's going to be brutal. And if the international investors who are buying our bonds back off just a couple percent, we got problems. I think that's an inevitability. I could be wrong, but I think it'll happen. I think it'll happen by next year. And then we'll get QE. I don't even know what we'll call it next time. And then in a couple of years, we'll have inflation. So all the people are saying, oh, look, tariffs haven't caused inflation. It's because everybody front ran them. And now everybody's slowing down as inventories peel off. I mean, that's one of the things that you should have seen this week is inventories are getting thin. If inventories are getting thin, right, there's not enough widgets out there for all the people that want widgets. And if you ever took an economics class, you know what that means, right? They just use widgets as the imaginary product. So if inventory, the supply, is getting thin, and to replenish that inventory is going to become more expensive because of imports on 30% of all products, then there's inflation. Now, I don't think the impact of inflation is all that big. I think it's going to be a single-digit percentage. But you tell me, if all of a sudden the inflation numbers are 8 or 9%, how many people do you think are going nuts? It's a lot of people. So keep an eye on this stuff because it seems to be a lot closer to me, in my opinion, to happening than what I think all the cheerleaders and pom-pom wavers think. Right, all the podcast pundits. That's fine. Most of them make their money as media personalities. When Jim Rogers went on CNBC in late 1998 and said they were in a bubble and it's going to crash, and the guys on CNBC who had washed out from Wall Street laughed at him, I listened to Jim Rogers. I didn't listen to the pundit. I listened to the self-made billionaire at 37 years old. Right, he was George Soros' first partner, or I don't know if it was Soros' first partner, but one of the super early ones, Quantum Fund. So just understand, when it goes, it probably goes pretty fast. Teresa, I'm going to let you close. What's the most important thing you're thinking about?
Oh, wow. I guess just the markets just keep going up. So I'm watching that and then watching for when that breaks. But I mean, the old saying, right? The trend is your friend until the end. And it's just not showing signs of breaking right now. We see all the signs that it certainly can, but it's still going. But I'm being cautious. I've got a lot of cash. So
yeah. Well, like I said, I think we're on thin ice. It's just it hasn't cracked yet. So all right, everybody, have a nice night. This went way too long again, but we had fun.
Good night.
All right. Take
Agreed.
care.
All right. Thanks for having me.
Thank you.